Dear students, today we are going to study about VAT and GST, that is value added tax and goods and service tax. So, initially let us look upon the basics of this value added tax as well as the goods and service tax. So, the full form of VAT is value added tax. So, it is a state level tax and is applicable to some products such as petrol, diesel, alcohol for human consumption that are not taxable under the GST Act. So, the main product that are included in this state level tax, it is the petrol, diesel, alcohol, those products which are not applicable or which are not taxable under the GST Act. And this what was introduced, value added tax was introduced in 2005 as a replacement of the earlier sales tax. So, before the introduction of VAT, the sales tax was prevailing, and in 2005 the sales tax was replaced by this value added tax, and the intention of introducing this VAT is to bring a unified tax rate for products and services across India. So that was the intention, but the VAT regime did have a few drawbacks. Major problems that leads to the introduction of GST as a replacement of VAT includes the following. So, we understood sales tax was replaced by value added tax, and this value added tax was again replaced by the goods and service tax because of some drawbacks with this VAT. So, let us look what are the limitations faced by this value added tax which leads to the implementation of GST. So, VAT being a state subject, the applicable rate for the same products tended to vary from state to state. So, this is a state product or state level tax, this value added tax, and it seems that this tax rate is different for different states because it is a state level tax. Each state have different level of tax rate. So, there is a limitation with respect to a particular economy. In India, each state have different value added tax for the same product. Then another limitation is difference in VAT rules and regulations from one state to another. So that has increased the complications with respect to the businesses. So since it is a state level tax, each state have its own rules and regulations, and in Indian economy as a whole, this leads to many complications with respect to businesses. So that is another limitation. Then cascading effect of tax. Cascading effect means tax upon the taxes. So, in many cases, the consumers have to pay more amount of tax, or at each level of production, the tax is incorporated. So, the end user has to bear the cost of a single good or service that has been taxed multiple times. So, that is the cascading effect. Multiple times that particular product is taxed. So, since the time of its production, it has been taxed at different levels, and the final consumer have to give the price of the product including all these taxes, and that will obviously increase the price of the final product. That was the major limitation with respect to this value added tax. Multiple level of taxation, or multiple times the particular product is taxed. At each level of its production, tax is applicable, and that in each tax is applicable in the final price of that product, which is a very heavy burden to the final user. Then another limitation, businesses paying customs duty on their raw materials or inputs did not have the option of offsetting such cost through input tax credit. So no mechanisms like input tax credit was applicable. So business people, they have to pay the customs duty on the raw materials which they are using for the production of this particular product, and they cannot offset this cost or offset this price on input or raw materials, which automatically leads to rise in price level of that particular product. So input tax credit system is not at all applicable in this value added tax. So because of all these limitations or drawbacks, this value added tax was replaced by the new goods and service tax. So GST, it is goods and service tax. So main intention behind the designing of this GST was to eliminate all the drawbacks or limitations with respect to this value added tax. So, in that respect, we can find some key features of GST as single tax rate. Introduction of a single tax rate for a particular good or service across India. That means this GST is not a state level tax. Across the whole economy, this tax will have a single rate, and that will reduce the compliance burden through the introduction of a single set of GST rules. So, since the rate is single tax rate, the GST rules and regulation for each state will be same. So, there is no complication with respect to the price of the product or the tax rate of the product in each state, because this is a single tax rate across India, and rules and regulations with respect to this goods and service taxes applicable in all states. So that will eliminate the cascading effect of taxation, because GST is applicable only once on a product. So there is no problem of multiple level of taxation at each level of production. The GST is applicable only once on the final product or service. And introduction of input tax credit mechanism. In the value added tax, we saw that there is no provision of input tax credit, that is the producers or the business people have to pay the tax rate at each level of its production. So here there is input tax credit mechanism, and that help the business people to offset GST cost on various inputs. So whenever, if they have paid the GST cost at different levels of production or for inputs or raw materials, that can be offset by this input tax credit mechanism at the final stage. And these unique features or these unique characteristics form the basic difference between GST and VAT. So the limitations with respect to VAT was more or less solved with this goods and service tax. Okay, and this GST is included in the final price. So the tax is included in the final price of the product and paid by consumers at the point of sale and passed to the government by the seller. So the tax is applicable only to the final price, and that will be paid by the consumers, and that final tax included in that final price is passed to the government by the seller. So we can say that unlike VAT, which is a state level tax, this is a common tax used by majority of countries globally. So not only in India, in many countries this GST is widely used, and this is a single rate tax across India. So France was the first country to implement GST. It was in 1954, and after that many countries have adopted this tax system in some form or another. So in each country there may be some difference in this, in its rules or regulations or the key features, but the main common features will be same in all countries. Some of the countries with the GST include Canada, Vietnam, Australia, Singapore, UK, Monaco, Spain, Italy, Nigeria, Brazil, South Korea, India. So many countries are there using the goods and service tax. So let us check in detail the main features of GST. GST is applicable on supply side. That is applicable on supply of goods and services as against the old concept. That is old concept during the sales tax period or the value added tax period. The tax is applicable at each level of production. So manufacturing of goods to the sale of goods or sale of provision of services, at each stage they have to pay the taxes. So this is GST is applicable on supply of goods and service. That is at the point of sale only this tax will be applicable. Then it is a destination based taxation. The GST is based on the principle of destination based consumption taxation as against the origin based taxation. So taxation is based on the destination, that is the final stage of the production. It is not applicable from the origin level or from the starting point of the production of a particular good. Then dual GST is another feature. Dual GST with center and state. So this GST is actually it is a dual GST, that is there will be central GST as well as the state GST simultaneously applying tax on a common base. So based on a common rule or common regulation, state and center is collecting tax separately but simultaneously, and therefore it is called dual GST. So at the center it is called central GST, and levied by the state is called state GST. So importing of goods or services. So instead of CGST and state GST, another area is the importing of goods and services, and it would be treated as interstate supplies, and it is considered as integrated GST in addition to applicable customs duty. So mainly we can say there is central GST, state GST, and in addition there is integrated goods and service tax for those goods which are imported. Then GST rates are mutually decided. So we saw that there are three components. Central GST is there, state GST is there, as well as integrated GST is there, and these are levied at rates which are mutually agreed upon by the center and state. So there will be a mutual agreement between the center and state regarding the GST rates at central, state or integrated level. And there is a GST council, and this GST council, based on the recommendations of GST council, the rates will be notified or will be finalized. Then multiple rates. So initially GST was levied at 4 rates, 5%, 12%, 16% and 28%. And there is a correct schedule or list of items that would fall under these multiple slabs. So GST council will decide what are the components that have to be included under each rate. So in 5% there will be some components, 12% GST there will be some components. So based on the nature of the consumption of commodities that we are using, these are included in any of these 4 rates of GST. So there will be multiple rates with respect to GST. And as we have just saw, there are 3 taxes applicable under this GST. CGST, central GST collected by the central government on an intra-state sales. So that is transaction happening within a particular state. This is just an example. Now SGST, tax collected by the state government on an intra-state. So within a state, the tax collected by the state government is the state GST. Within a state, tax collected by the central government is CGST. And IGST, tax collected by the central government for an interstate sale. That means from one state to another. So from Maharashtra to Tamil Nadu, if we are importing a particular component, the tax for such a transfer will be collected by the central government, and it is called integrated GST. So the other 2 are intrastate, within the state. If we are taking an example, inside Kerala, the tax collected by the central government for a particular product, CGST, tax collected by the state government for that particular product, it is the state GST. And if we are importing a particular commodity from Tamil Nadu to Kerala or from Maharashtra to Kerala, there will be a confusion regarding the collection of tax, whether it is Tamil Nadu or whether it is Kerala that have to pay the tax. So in order to avoid such a confusion, such type of importing from one state to another or from an interstate sale will be collected by the central government, and it is called integrated GST. So what are the benefits or advantages of GST over VAT? So it is a single comprehensive destination based tax, GST, and it will unify the entire country in terms of how the tax is collected. So the introduction of GST was a great revolution with respect to Indian taxation system, and one of the main advantage of GST, that is it will eliminate the concept of tax on tax or cascading effect of tax or multiple effect of tax will be eliminated with the introduction of GST. So this is the benefits we have already discussed: removal of cascading effect, simple online procedure, lesser complications with respect to business people, then defined treatment for e-commerce companies. So online transactions, all such type of transaction will become more easy with respect to GST, because there is a correct regulation or rule with respect to the collection of taxation with respect to a particular product. So let us just explain or look upon an example with respect to this VAT and GST. So consider a consultant providing service to his clients. and for the service provided by this consultant, 15% professional tax is applicable. So the product of that, price of that particular service is 1 lakh. So 15% tax is there. So the total output tax liability is 15% of 1 lakh, that is 15,000. So total, in addition to this 1 lakh, he has to give 15,000 as the tax, professional tax. So in the event that if this office supplies were bought, so there are many raw materials or many office supplies for that particular service, and the amount or the price of that office supplies is rupees 30,000 with a tax of 5%. So for this office supplies, office raw materials, 5% tax is there. 30,000 is the price of the supplies. So 30,000 plus this 5% tax means 1,500. 5% of 30,000. So the whole amount that have to be paid as tax, this 15,000 is first tax, then 1,500 is second tax. So total 16,500 will be the tax that he has to pay, or the customer has to pay under the VAT system. And there is no input tax credit mechanism, so the supplier cannot offset this additional taxes rendered under VAT systems. It cannot be deducted. This 1,500, all the taxes that is included will be added in the VAT. Now coming to GST regime. So same product, same service, 1 lakh rupees is the price of that particular service. Tax is 18% is the professional tax. So 18% of 1 lakh is rupees 118,000. 18% of 1 lakh. Now same situation, office supplies, price of the office supplies is rupees 30,000 and 5% is the GST. So 5% of 30,000, it is 1,500. So the total amount here, the total amount that is payable is 16,500 only, because from this 18,000, this 1,500 is deducted. That is the case of input tax credit. So the only one tax will be applicable, and this additional taxes that has been incurred by the supplier will be deducted at the final stage. So the final amount that he have to pay is only 16,500, that is 18,000 minus this 1,500. So that is the situation with respect to GST. GST has the facility to deduct the tax paid on supplies from the output tax liability. So from the final output tax liability, the tax paid on the production stages or paid on the production purpose or the raw materials of that particular service or product will be deducted at the final stage. So by implementing GST on goods and services, the economy is improving through the elimination of multiple tax problem or cascading system of tax, and that will help the business process in India. So this GST, most countries with a GST have a single unified GST system, which means that a single tax rate is applicable throughout the country. So a country with a unified GST platform merges central taxes with state level taxes and collect them as one single tax. So many taxes are merged into this goods and service tax. So everything comes under a single tax rate. So many central taxes, sales tax, excise tax, service tax, as well as state level tax, all these are merged into a single tax system, that is the goods and service tax. As per what's being referred to as the GST bill. So in 2014 we have seen a GST bill, that is 122 Amendment Bill 2014. India will have not a single federal GST but a dual GST. So according to the GST bill, we have a dual GST system levied and managed by different administration, and that dual GST system will include central GST and state GST. Monitoring will be done independently at the two levels. So there will be independent monitoring under the two levels, under the state GST as well as the central GST. Then the rates for both CGST and SGST will be fixed by the GST Council. So central and state level, GST will be fixed by the GST Council upon a mutual agreement. The members of the GST Council include state finance or revenue ministers, as well as the chairman will be the union finance minister. And once the rate is set by the GST Council, all the state will have to adopt that particular rate. So individually states will lose their right to tax the commodities as they wish. Instead of that, states have to follow the rates given by the GST Council. This development needs to be viewed in the context of a steady erosion of states' freedom. So there is a criticism that is saying with respect to this introduction of GST is that states are losing their individual freedom to decide on taxes and tax rate. So that is a problem with respect to, or that is a criticism with respect to this GST. So states are states have to follow what the GST Council is saying for the taxation. So the economist Prabhat Patnaik, he points out that according to the constitution, states have complete autonomy over the levy of sales tax, which accounted for 80% of their revenue. An attempt was made to curtail this autonomy with the introduction of VAT, and this VAT did not totally succeed because it still had 4 rates that states could play with, but the GST, which mandates a uniform rate, limited the autonomy of the states. So that is the limitation, because according to constitution, states have the freedom to collect taxes, sales taxes on the commodities, and the major part of revenue for each state is from this tax collection. So 80% of the revenue of many states includes this sales tax revenue. So once this taxation freedom is taken away from the states, they lose the autonomy of the tax collection. And initially, by the introduction of VAT, this autonomy was restricted to a certain extent, but still we have seen that in value added tax there are again 4 rate slabs: 5%, 12%, 16%, 18%. So different level of taxes are there. So again, state have the autonomy to include the products in these tax rates, but that was also curtailed by the introduction of GST, because by the introduction of GST, only one tax which is decided by the GST Council have to be followed by the states. So that again limits the states' autonomy or states' freedom to decide on taxes and tax rates. The taxes that are incorporated into GST at central and state level. So at the state level, value added tax or sales tax, entertainment tax, octroi and entry tax, purchase tax, luxury tax, then lottery, betting, gambling, all these taxes are merged into state GST level. So one tax, that is GST. At the central level, excess duty, additional excess duty, service tax, customs duty, special addition duty of customs, all these are incorporated into GST as one tax. So just looking upon the difference or the comparison with respect to GST and value added tax. So the primary reason behind the introduction of GST is to eliminate the cascading effect of taxes on the economy. And what is a state level tax? Charged on the sale of goods immediately upon the preparation of sales invoice or when the goods are moved for sale. So this table just shows a comparison between VAT and GST. So where it is taxed on both goods and services, GST will be taxed. On the sale of goods, value added tax will be applicable on the sale of goods, and for services, service tax will be there. Then applicable on supply of goods and services at the time of sale of goods, what will be applicable. Then tax rate and laws, tax rate are uniform. Here different rates for each state. Authority, tax collected is equally shared by central and state government with respect to GST. Here this is confined to the state in which the sales takes place. So where is the sale of the product is taking place, there the tax is collected with respect to VAT. Then returns are filed every 20th of the next month with respect to GST. For VAT, the dates for filing returns are 10th, 15th or 20th of the next month. Mode of payment, online and offline is applicable for GST, but with respect to VAT, only offline option is available. Input tax credit is available in GST. There is no input tax credit for value added tax. Then compliances. So, movement of goods, a similar set of compliances for the movement of goods between the states. Here, movement of goods from one state to another will have different compliances, or there will be different rules in each state for the movement of goods. Then GST is collected by the consumer state, VAT is collected by the seller's state. So these are the comparison or the difference between the VAT and GST with respect to different parameters. So altogether we understood the basic features and the importance of introduction of GST, and also the basic features and the limitations of VAT which leads to the introduction of GST. So GST is a reality today, and it has brought the Indian taxation under one nation one tax system. The rise of GST has subsumed all the indirect taxes including VAT, service tax, excise duty. Many taxes has been subsumed or merged into a single goods and service tax, and the cascading effect was eliminated in that way. The game of GST was introduced to bring down the unwanted inflation in the economy, because this VAT and all other taxes which have a multiple tax problem or the cascading effect will lead to high prices. So in that sense, this GST leads to reduction of inflation situation in the economy. So the economic arguments trotted out in favor of GST are basically the same as were given for the introduction of VAT. So the economic argument for GST or for VAT are same in different periods. So the GST, by subsuming an array of indirect taxes under one rubric, will simplify tax administration, improve compliances, and eliminate the economic distortion in production, trade, consumption, etc. Then, by giving credit for taxes paid on inputs at every stage of the supply chain and taxing only the final consumer, it avoids the cascading effect of taxes, thereby cutting production cost and making export more competitive. So these are the major background with which GST was introduced, or the VAT was replaced by the GST. So first is all the indirect tax are subsumed into one tax, that will improve the economic situation, and the second is the cascading effect of taxes will be avoided by the introduction of GST. So by this we have completed or concluded the basic idea with respect to the concepts of VAT and GST. So we have to understand these two taxation system under one head, because the intention behind forming this VAT and GST was same, but the drawbacks or limitations with respect to value added tax leads to the replacement of this VAT with the GST. Okay, thank you.